Hello, it's Brian Rezny. It's question and answer day. And of course, we're getting to the end of 2021. A lot of questions on my TV radio show all the time about whether it's higher taxes, whether it's about this mega inflation, whether we're going to have a stock market correction, and what about the new, obviously, COVID variants that are out. You know, I did an update for our clients, and I talked about there's over 30 COVID variants already, and there's going to be more next year and the year after and the year after. Folks, you got to live with it. What I will say is this. It's how you invest your money. Do you follow a strategy? Are you buying the dips in certain areas of the overall equity-based market or investment markets in general when the opportunity arises? At our firm, we're fully invested. We're invested in what we feel to be the right areas based upon hardcore research. What I find, though, with a lot of the calls that we're getting from our TV and radio show listeners is there's a lot of emotional investors who are kind of not sure what to do. They're jumping in and out. They're making that change or not making a change they should be making. It all comes down to strategy and research. I've been doing this for over 30 years. One of the things that is the biggest mistake investors can make is not doing daily research and not following their investment strategy. And that tends to be the do-it-yourself investor who does really a lousy job managing their own money because, again, they don't do any real research and they don't follow any real strategy. So what happens is you're making emotional decisions which always end up losing you more money or giving you mediocre type returns. So if you're tired of mediocre and you're trying to change the playbook for 2022, then you better start spending some money and spending 8 or 10 hours a day on research, and you better develop an investment strategy. Otherwise, you're going to have mediocre returns and you're going to take more risk in order to get mediocre returns. Not a good combination at all. As with the COVID variant, again, as I said earlier, there's over 30 variants already, and there's going to be 30 next year and the year after. It's part of our daily life, just like the flu that comes every single year. There's new flu shots that are developed. COVID's going to be the same thing. People need to move on. They need to invest properly, and they need to realize there's areas you want to invest in or sectors, and there's areas you greatly want to reduce or avoid. And I'm going to go back to what I look at Europe. Avoid Europe. It's a cesspool of socialism with limited opportunity and more risk than the U.S. marketplace. And if you're over-allocated still to bonds, it's not the safety net you thought they were. And unfortunately, too many retirees are still over-concentrated in bonds, probably maybe because you're a little bit emotional and you think it's your safety net and going to save you. But at the end of the day, bonds can be, from time to time, as volatile as the equity market or other asset categories. If you're not a client of my firm and you want to become a client, we do manage larger portfolios of $1 million and greater. Call our office for a consultation to discuss our services, and if we can help you, start moving you in the right direction. Make sure you have yourself a great Christmas and a happy New Year.